What's up, everyone? It's Scotty with MoneyVest. So we've got lots to unpack. We're going to cover a little bit about the markets here and, of course, go over the technical analysis, volatility, of course, our MoneyVest index, crude oil prices, and everything in between, including, of course, the Magnificent 7 stocks as well. As always, if you enjoy this video and find it helpful, make sure that you drop a like. I would really appreciate that, and subscribe to the channel if you haven't already. It would really help us, gain more exposure, of course, help with the algorithm as well. And also, do check out our courses and our Patreon down in the description below as well. There's going to be a link if you want to join, of course, access all the members-only private videos, again, including 50 plus members-only videos, including our 30 stock shop list, buy targets included, intrinsic values included, as well as our MoneyVest index, and of course a lot of other channels, including our trade alerts and Discord channels and trade ideas as well. And again, we do have individual courses on sale right now. 50% off coupon code is going to be May 50, available until the end of this month. This includes your fundamental analysis, technical analysis, options trading, and psychology of investing, money and markets as well. So this was the state of the markets yesterday. Again, this update is for yesterday, and we're going to cover a little bit about the other topics and lots to unpack here for earnings as well. NASDAQ here basically flat, S&P flat, and the Dow Jones also very, very flat here. Now, this is the market's performance over the last 1 year. For a lot of other asset classes. So you'll notice that S&P 500, NASDAQ, and the Dow Jones have done really well in the last 1 year, as well as year to date, and in the last 6 months as well. Really, since October of 2023, the markets have just been ripping higher to higher and higher feats here. Gold prices 12% up year to date, and almost 15% on a 1 year basis. And crude oil also is up on a year to date basis, which is exactly why inflation has been a little bit more elevated, and that's been concerning for us, as I've highlighted in my previous videos. Natural gas prices down year to date, but up over the last 1 year, and the dollar index is also up on a year to date and on 1 year basis as well. If you also include the treasury yield, so the 10-year treasuries, they're also up on a year to date basis. So if you come over to the US 10Y, you'll notice that we are on a year-to-date basis up a little bit over 15, almost 16%. They're starting to roll over a little bit now, but the 10-year treasuries, of course, are up almost 16% on a year-to-date basis, starting almost at 4.5% as well. This is the entire state of the market from yesterday. Microsoft was down, Nvidia was down, Tesla was selling off. I actually ended up closing out my covered calls on Tesla at over a 94% profit. I'll be looking to sell more calls the next time Tesla actually rallies higher. So again, if you want to get access to options alerts, which again I can confidently say the success rate is very, very high for when I sell calls and puts, even including all of our members, when they're selling options, the success rate is very high. So again, link's going to be down below if you want to join. Apple here 38 basis points higher. Google, Meta also pushing higher on the day. So the entire market was mostly green, with the exceptions of some Magnificent 7 companies like Microsoft, Nvidia, Tesla, and of course Disney selling off after the earnings as well. This right here was going to be the entire breakdown. So most sectors were green, with the exception of technology and comms cyclical selling off. In the last 1 week, everything is green, so all 11 sectors pushing higher. In the last 1 month, there's been a little bit of a split market again. Utilities, communication services, defensive sectors pushing higher, with energy, materials, financials, and real estate selling off. We got cocoa prices, natural gas, we got cotton, canola, volatility all pushing higher, with wheat, copper prices, palladium, gasoline, and sugar selling off as well. And Bitcoin here just a little bit over 62,000. And Ether just under $3,000 as well. So Milken panels, this was a panel that happened earlier this month, in the month of May. So U.S. economy outlook with unprecedented national debt. So there was a panel with a lot of strategists and a lot of other analysts on this global market reflection standpoint. They had a lot of conversations, a lot of them around artificial intelligence, of course, economic growth, but of course, the most important topic was also the state of the economy with respect to where the U.S. national debt is. And contrary to what investment chiefs predicted at Milken last year, the U.S. economy expansion is alive and well. And GDP growth blew expectations out of the water by surging in the third and fourth quarters of 2023. But despite continued concerns about stagflation, Milken speakers overwhelmingly expressed confidence about economic growth at a May 6 session called Global Markets at Inflection. And the so-called S word, which is stagflation, as panel moderator Gerard Baker of the Wall Street Journal referred to it, is marked by a stagnant economy and persistently high price growth, which is again stagflation, and neither aptly describes this backdrop as growth is cooling, but far from lackluster, while inflation is slowly heading lower as well. Stagflation is not what we're in or going through right now. This is Andre Estes, the chairman of Brazil-based investment bank, and we have a healthy growth in the U.S., even moderating, and inflation is slightly above the targets. And again, consumers drive over 2/3 of U.S. GDP growth, and maybe I'm a bubble, but you go out, every airplane you get on is full. The restaurants are still pretty full. Wages are still increasing, is what Jenny Johnson, CEO of Franklin Templeton, also mentioned. So you're absolutely right. I think the growth is good. Consumer spending is very solid. Airplanes are full. Restaurants are full. I mean, you're seeing a lot of spending activity across the board. But this right here was a chart that was shared in our Discord earlier, and this was from Kalila, one of our members. And it's not the first time we're going over this. This is a chart that we have talked about plenty of times before. Credit card debt, total debt versus savings rate. You can see how much credit card debt has increased since 2021. I mean, it was at around $1 trillion, close to $1 trillion. It obviously contracted significantly in 2020 and 2021 during the great COVID pandemic. And then since, it's just been on a straight line up. It's moderating now at $1.337 trillion. But this is just enormous amount of growth here in the amount of credit card debt. And the savings rate has just come down from highs of 25%, of course, at the time when people were not going out spending, but they were given stimulus checks. So the income kept climbing. And as a result, we are seeing savings rate really, really high. But then as soon as the economy opened up, now we're back to 3.2%, which is like quite crazy if you think about it. Like if you're earning $100, you're only really saving $3.20. On the back of, again, expenses really, really high because of higher inflation, spending is out of control, and as a result, you've got, credit card debt, which is, eclipsing over 1.3 trillion. And this could still, on the surface, make us feel like, oh, the economic growth is very strong. I mean, airplanes are full, restaurants are full, people are spending, wages are increasing. But the underlying factors, which again is all backed and fueled on the back of, unfortunately, debt, which is not a sustainable path, because Jerome Powell's mentioned this. Even JP Morgan CEO Jamie Dimon's mentioned this. A lot of folks have mentioned or their concerns with regards to the U.S. national debt. And the economy is still strong, extremely strong. Consumers are still doing really well. Businesses are still doing really well. This was Shroff. And when you look at the financial positioning of each, all things considered, given all that we've been through, it's not as good as it can get, but it's really strong and very, very consistent as well. But this is the unprecedented debt load could eventually lead to a disaster. So Uncle Sam is $34.7 trillion in the hole and counting, and it took just 106 days or 3.5 months to rack up the latest trillion versus nearly a dozen years to reach the first trillion. So just to give you a little bit of a size and scale here of how quickly we are ramping up on the national debt here. So this was a more linear growth. So if you really just consider over here, this was a little bit of a linear growth, then a little bit of that, acceleration. So you can see the angle, right? So you can see the angle is a bit different over here. And then now you take a look at this angle over here. This is now even further to the upside. So you can kind of see the different stages of how quickly the debt levels have increased and how quickly deficits are running. And this, of course, is not a sustainable path, because then eventually you've got something like this, which is just going up in a even steeper angle, parabolically higher. And then eventually, what's going to be the end game? And this right here is basically the U.S. national debt as a percentage of GDP, which, of course, right now is sitting at 99% because GDP is also going to be growing. But by 2054, the debt levels are expected to be well over, 50 to 60 trillion. And that's going to be a projected 166% of the U.S. economy, which, of course, is going to be quite crazy. We are seeing the government spending literally at a level that you wouldn't see outside of world wars. And that's the level of spending that we're seeing from the U.S. government. And again, nobody knows the end game here. Nobody really knows what's going to be the end game or what's going to happen eventually. But all we can really hope for and expect is that it's still under control, it's still manageable while we can. And even Ray Dalio's mentioned his concerns about the national debt multiple times in multiple videos and multiple books. So really nobody has the answer, to be honest. I mean, even Warren Buffett was asked point blank multiple times in the shareholder meeting, and even he has been kind of running, around circles, beating around the bush. And most of his answers, even in this past meeting, was not about straight to the point. It was kind of like talking about everything else except for the question that was being asked. But the bottom line is, again, I think it's just a big, big experiment that we're all a part of, and we're going to have to find out eventually how this all sort of gets resolved, basically. So moving forward, if you take a look at some of the election years, right? So presidential election years, the S&P 500 is up 75% from the time June through August with an average return of 7.3%. So that is actually a very, very solid rate of return if you consider the averages. So 75%, which is one of the highest numbers here, along with October, December, so Q4 during presidential elections. June through August and October through December, 2 times when the markets are up, the probability of being up is very, very high. With, of course, the average gain of about 10.4, it says 1%. So you got to average those out. And this right here, again, is going to be the average returns for all years. June through August, we're looking at 7.27%. And October through December is going to be 2.3%. So very, very high probability that during times of elections, markets are up in June through August. So may not be the time to actually sell stock is what they're getting to with this seasonality summary of showing returns and probability of success in the months of June and August. Again, but this is all seasonality, a lot of different circumstances for different years. So we can't just bank on this idea that, the markets have been up in the past election years, June through August. That means they're going to be up here also. Doesn't really work that way. So moving forward to our analysis on the S&P. So this is the chart. This is the basically the 30-minute chart that we have shared on the channel before. You can see the lower highs and the lower lows, and then of course an accelerated sell-off, and then a nice, pretty decent reversal of higher highs and higher lows again. And support level right now is going to stay put at 51.67 with a reasonable resistance over here, and a target back up to 52.20, 5200 to 52.20. That's going to be the S&P 500 resistance to keep in mind moving forward. With, like I said, the support level staying put at 51, 5200. So right now, if you come over to the daily chart, what you will notice is a very nice, decent recovery back higher with some nice, decent higher highs and higher lows. But we are now once again approaching some levels of resistance. And if you do get rejected here, then that would confirm a couple things. Number one, that is the peak. That was the top for the market. And this is a lower high, which could be, again, a signal that this was a relief rally. This was a technical rebound. This is the rally that we're seeing, after selling off so much so aggressively, we were sold. But this is a lower high, which means there is more potential downside left in the market. Just, again, thinking out loud, and that is only if we get rejected here and, of course, make a lower high from the markets at the moment. Talking a little bit about the NASDAQ. So IXIC here, almost approaching that back up to all-time highs. Very nice, again, uptrend here, but a huge resistance to follow up with at around 16,470, 16,450. That's going to be the level to keep in mind. And of course, the support level is 16,000 down to as low as 15,900 to as much as 15,100. So again, we got multiple tiers of support and a huge resistance, of course, sitting at 16,450 for the NASDAQ. Coming over to Apple stock. And by the way, let's just quickly go over volatility as well. So volatility continues to slide lower. So a little bit under 13.5. And we're pretty much back down to the low levels of this red rectangle in the 11.5 to 12 range. And again, if you come over to the MoneyVest index that we have discussed in our previous videos, that's going to be over here, I believe. So we are moving higher. So we're at 3.7 now, which of course is a pretty reasonably high level. But of course, it's not until we get down to that 2.4, 2.5, under 3 is when we actually start feeling a lot more excited and a lot more interested and be more aggressive in dollar cost average into the market. So keep a close eye on this index. I think it's going to be very, very useful. I think this is pretty much a game changer. And the next time, I kid you not, this is literally, I'm not one for giving guarantees. I'm still not going to give a guarantee, but I'm going to tell you with very, very high level of confidence that the next time the markets are in a bear market and MoneyVest index drops down to, like, let's say 2 or 2.2, 2.5, that is by far going to give you the best risk reward tradable opportunities in the market. And this is, I think, in my opinion, is going to be the most useful, most helpful thing to watch as the markets are pulling back and selling off. So keep in close mind. So that is going to be very, very important. And that's what I mentioned in our Discord yesterday, is that it's going to give us fewer opportunities, but those opportunities are going to be making all the difference over the long term. Now, coming over to Apple here, pulling back, consolidating sideways. So this is still the gap that it needs to fill. May or may not get filled eventually. We'll find out. But resistance and target stays put at 195, 196, with a very strong support here in the 160s, all the way down in the 150s. And of course, a much stronger support here in the 130s for Apple as well. So a lot of consolidation sideways, but we got 3 really important tiers of support, 1, 2, and 3. You can track that. You also have access to my TradingView charts. You can access that yourself over there as well. Talking about Amazon, and Amazon here almost hitting the all-time highs. There we go, 189.94. So all-time highs. Market cap sitting at just under $2 trillion for Amazon. So resistance, of course, in the 188, 189 level, and support level is going to stay but roughly at 170, 171 for Amazon as well, down to as low as, of course, 159 for the company. But very strong progress, very strong momentum here, higher highs and higher lows. And congratulations to all Amazon shareholders doing really, really well. I've got a video coming out on Amazon very soon going over the earnings for this company. Talking about Tesla, and Tesla again it was down over 3.7%, down another 3.6%. Pre-market will be looking at, again, selling maybe more calls if, of course, Tesla rallies higher. But I have no doubt that I believe that it's going to be the 150s here, possibly moving forward again inside this green rectangle once again. And resistance is going to stay up roughly at $200, as we've already discussed. So that $200, huge resistance, huge area of supply. And right now we're starting to break down below 177 support as well. And the next target, unfortunately, is going to be down in the 150s for Tesla. Talking a little bit about Meta platforms, and Meta here up over 0.5%, so continues to move higher, but it's now approaching that resistance and that area of supply. So that is something to keep in mind for Meta, all the way up to that resistance at 520, 519 for Meta, and support level is going to stay put at 385 for the company as well. So keep a close eye. Nice little gap fill. We've pretty much filled this entire gap after the earnings, and now in my opinion it's possible that it starts getting rejected at these levels and starts to roll over, considering it's also trading inside this area of supply at the moment. Nvidia reports earnings very soon. It is at resistance here, so that's going to be that level to keep in mind for Nvidia, and that's going to be sitting roughly at $909, $910. Support level is going to stay put at $845, down to as low as $741 for Nvidia. So those right there are going to be some levels to keep in mind for the company. We were obviously in a very nice downtrending channel of lower highs and lower lows, and we got a little bit of a breakout. And the next resistance target is going to stay put at 967 for Nvidia. Advanced Micro Devices, on the other hand, support level is going to stay put here inside this green rectangle. That's going to be validated multiple times, as it already has, in the 150s. And resistance and target is going to stay put at 164 for Advanced Micro Devices. So nice little sell-off here of over 20 to 30%. In fact, almost 40%. And then we got a little bit of a rebound. RSI MACD looks good. Resistance is going to stay put at 164 for AMD. PayPal, on the other hand, still got a huge resistance to break out of. Pre-market down 1%, but resistance and supply sitting at $68 to $70 per share, with the support level staying put at $65, of course, inside this green rectangle. Also, a lot of consolidation, and $57 is going to be that level to also keep in mind for PayPal moving forward. Talking about Visa, and Visa here also recovering very nicely after the rebound from that support of 265, RSI MACD, and the L3 banker oscillator. Everything starts to look very, very good, and resistance is going to be all the way up to 290, and that's going to be that target for Visa moving forward as well. Talking about Netflix, and Netflix also had a very strong 1.5% breakout above that resistance of 596. We're going to go ahead and turn this level into a support now. So it's an idea for us to see whether it validates and supports that level, or if it breaks down even further. The next target is going to be 537, and that support is where Netflix's next area of demand is going to be. We also have a little bit of a gap to fill, with the resistance, of course, all the way sitting at 637. RSI and the MACD looks pretty decent. There's possibilities that after this breakout, we come down, validate that 596, and then, of course, take another leg higher to 636 for Netflix. Talking about Google, and Google here also rebounding well after pulling back, so gapped up on the earnings, pulled back a little bit to fill some of that gap, and then, of course, rebounding back higher a little bit, but the RSI, MACD, again, a little bit more on the overbought side, so I wouldn't be surprised if it does sort of cool off a little bit from this rally. It's one of the only names that has done really well among Magnificent 7, still trading pretty much at all-time highs, along with Amazon. But support level is going to stay up right here in the 150s for Google. And Microsoft pushing higher from those support levels in the 390s. Resistance staying put at 417, so that's where we are getting rejected at the moment. And again, this right here is going to be inside this green rectangle as a support, all the way down to as low as 365 to as low as 348 for Microsoft as well. And then finally, we come over to Enphase and Costco. And Enphase here also still trading inside this downtrending channel, lower highs and lower lows. Support level is going to stay up roughly at 106, 107, down to as low as $92 per share for Enphase, with a resistance and a target up to as much as 138 for Enphase. And finally, we come over to Costco. And Costco here with a huge breakout to the upside, massive move from lows of about $703, rallied over 9.8, almost 10%. And next resistance and target is going to be all the way up to $784. But I do believe that Costco is, again, trading at a very, very expensive valuation. Year to date up over 17%. But I do think it's very expensive at the moment. So hope you all enjoyed this video and found it helpful. If you did, make sure that you drop a like. And of course, don't forget to subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below. Don't forget, individual courses, 50% off. Coupon code is going to be May50 if you want to take advantage of that until the end of this month. So as always, make sure that you drop a like. Check out the links down below. Happy investing. I'll see you all in the next video.